Abolishing income tax presents a complex economic and social dilemma. Proponents argue stimulated economic growth by freeing up disposable income and incentivizing work and investment. The elimination of income tax could potentially unleash significant economic growth. Reduced tax burden. Individuals and businesses would have more resources, potentially leading to increased consumer spending, business investment, and entrepreneurial activity. Simplified tax system. The current income tax system is notoriously complex, leading to high compliance costs. Abolishing it could simplify the tax code, reducing administrative burdens for individuals and businesses. However, significant challenges arise. Revenue shortfall. Income tax constitutes a substantial portion of government revenue. Abolishing it would create a massive budget deficit, necessitating drastic cuts to public services or the introduction of new taxes. Increased inequality. The current income tax system is progressive, meaning high earners pay a larger percentage of their income. Replacing it with alternative taxes like sales tax or consumption taxes could disproportionately burden lower-income individuals, as these taxes often consume a larger percentage of their income. Undermining public services. Reduced government revenue would likely lead to cuts in essential public services such as education, healthcare, infrastructure, and social safety nets. This could have detrimental long-term consequences for economic growth and social well-being. Economic instability. Reliance on alternative revenue sources like consumption taxes could introduce greater economic volatility. These taxes tend to fluctuate significantly during economic downturns, potentially destabilizing government spending and economic policy. Finding alternative revenue sources. Abolishing income tax necessitates identifying and implementing alternative revenue sources. Potential options include consumption taxes, such as sales tax and value-added tax VAT, which tax spending rather than income. Property taxes, taxes on real estate and other property holdings. Wealth taxes, taxes on accumulated wealth, such as net worth or inheritance. Corporate taxes, taxes on corporate profits. However, each of these options presents its own set of economic and social challenges. For instance, consumption taxes can be regressive, disproportionately impacting lower-income households. Property taxes can be unevenly distributed and can discourage investment in real estate. Conclusion: abolishing income tax is a radical proposition with potentially significant and far-reaching consequences. It would necessitate a fundamental restructuring of the tax system and would likely have profound implications for economic growth, social equity, and the role of government in society. Careful consideration of the potential costs and benefits, along with a thorough analysis of alternative revenue sources, is crucial before implementing such a drastic policy change. Disclaimer: this analysis provides a general overview of the potential implications of abolishing income tax. It is not intended to be exhaustive or to provide specific policy recommendations. The actual consequences would depend on a multitude of factors, including the specific design of any replacement tax system, the overall economic context, and the political and social climate.